Hey traders, what's going on? Jamie Saettele here. It is 1 o'clock in New York, and let's get started. Eileen's got a few questions. Is your live data pulled from the FXCM brokerage or from TradeStation futures? Well, it depends. I have 3 different charting packages over here that I'm looking at. So one of them is FXCM. One of them is TradeStation futures brokerage, but also has spot. And then there's another one, which is TradingView, which has a choice of like 3 different feeds on it. So that is hopefully the answer to the question. Most of the charts that I will publish, though, on the SB feed and on the website are going to be through the TradeStation program. And the feeds are usually going to be pretty close, obviously, to what FXCM would have. Anywho, let's get started. So just real quick, you guys can see me, or not me, but you can see the charts and you can hear my voice. Just make sure before I get started. Yes, AV is good. Pooja, hello. Hello, what's up, Mark? How you doing? All right. So the big event going on right here looks, what's up, Steve? How you doing? Looks like Aussie, and I'll get to that. First, we're going to look at Euro. Really not much to add from my standpoint. I think you guys and gals all know my, kind of importance been placed on 108.70, right? Which is the year open. We've gone through this a lot, but the year open, the weekly reversal support, that's the low week close, okay, 108.75. And we've also got a number of different, or say a number of other levels there. So if you A, B, C, D, E. Okay, so let's just say that we've counted this as a triangle. If we take the width of wave B and extend it from the breakdown level, you get 108.69. There you go. We have another level at 108.69, 108.70. Mark says, when did you enter the EuroCAD position? So the EuroCAD position was entered at 104 at why can't I think right now? At 144.80. So that would have been right here. Okay. Now this is on the FXCM platform. The high was 144.805 on my platform. On TradeStation, it's 144.79. Okay, so depending on where you trade, I don't, you may or may not have been filled, but that's what the deal was with that. It was 144.80 was the entry, and all the stuff that all the entries and whatnot they go on what the FXCM feed prints. You said limit was 145.09. Yeah, I don't. Limit was 145.09. No, it's a EuroCAD short position 144.80. The stop is up above 146, I believe, and the target is open because we were looking at potentially taking a much bigger trade on the downside. Let's see here. So 140. Oh, sorry. It's 144.80. I don't know why this says 145.09. That doesn't make any sense. Yeah, so sorry for the confusion. Let's see here. It was on the 16th when it was put up. Euro CAD 144.80. The Euro Aussie short was 145.09. So it's just the text got messed up. So Euro CAD 144.80. You can see it here. Okay. And then the Euro Aussie short was 145.09, which obviously didn't trigger because Euro Aussie never traded to 145.09. No, that's not your error. It's actually my error because I on the last update, I typed in the Euro Aussie rate where it should be 144.80 here. So that's my fault. Anyway, let's move on. I hope so. Sorry for the confusion. I'll get that changed, but yeah, kind of tricky, I guess, when you have Euro CAD and Euro Aussie right next to each other. We'll get to the Euro CAD thing, which, I mean, what a disaster. It looked like it wanted to fall off the face of the earth, and it's already, I mean, we might get stopped out of this trade by the time the webinar ends. Who knows? What a disaster. Okay, so moving on here to the euro dollar chart. So look, 108.70s, it's like the biggest thing ever. Okay, in fact, if we continue on here to continue on to, I mentioned in one of the things there's a square root progression down there as well. I'm just sitting here looking at dollar CAD rallying another 40 points since the last time I looked at it. So anyway, I'll explain the square root progression thing. So the low from 2015, okay, is 104.62. All right, 104.62. You take the square root of that and you add it, okay? The first square root progression is 105.64. The next one's 106.67, 107.69. The next one's 108.71. So we have another thing there, 108.71. Okay, so I am looking for more or less a big response or a big reaction at 108.70-ish, right? That is, just the level of all levels. I mean, it's huge. And again, if you look at, you can't see on this chart, it's an intraday chart, and you wouldn't even be able to see it if I made it a daily or a weekly or monthly because this data only goes back to the 90s. But if we were to look at a data feed that goes way back, you would have, back to the, pre-Bretton or since Bretton Woods using Deutsche Mark, you would actually have a trend line that goes back from 31 years, and it is also down there at 108.70. So there's a ton of stuff at 108.70. Let's take a bit of a different approach here. And instead of going through all the majors right away, I want to look at some of the other euro crosses with this. So let's start with euro yen. I have tweeted this chart a bit, I think, recently. Euro yen, again, if you look back at some of the old charts posted, we have just a significant major long-term fork that we're at, and we're kind of in the short-term channel right here, as you can see. Okay, let's see here. But what I'm looking for, here we go. I am looking for support on one of these trend lines. Okay, so there's a trend line from the Brexit low, which was a little higher. It's basically like 112.90. And then there's one from the low that's kind of the secondary low, the July low. And that is closer to the September 30th low at 112.59. So pay attention to this tomorrow. Again, tomorrow's ECB, so that's why we're heavy on the euro stuff right here. Is you got ECB tomorrow, so you want to pay attention to some of these euro crosses at 108.70. Euros are the really big one, but euro yen 112.60 could be quite the important spot as well. So we'll pay attention there. Euro CAD, of course. Take a look at Euro CAD, and we traded all the way down. Well, like 2 hours ago, the position was sitting a lot prettier, wasn't it? But we traded down under the low from July and actually into levels from April, and the market just reversed 150 pips in about 2 hours. This is a long-term idea. I do think that this breakdown could get you down towards 135, which is a trend line that goes back to 2012, 2015. We're in, again, 144.80. Probably go to break even here after the day's over, because there's really no reason to have a trade that was in your favor by 220 pips end up taking a loss on it. But yeah, even if we were to go through here, it'd probably still be looking for resistance, maybe on this parallel. Okay, if you scroll back, you can see the median line hopefully is some resistance up around 44.50 if we get up into that region. But this is a bigger picture idea, so you kind of have to give it room to work. All right, doesn't mean you have to be stupid about it, but you got to give it room to work. And you can see here, if the day ends like this, it will be quite the reversal, quite the spike, and reason enough to go break even on the trade at least. All right, what about Euro Aussie? This is the one that didn't get triggered. We were looking at the head and shoulders, the breakdown. It's certainly broken down. And on this trade, or this one, you've got the lows here down last December. Again, that was ECB 43.78. Really within, a number of lows between 43.7, let's call it 43.80 and 44.80. So those are going to be areas that, if you were to get a rebound into there, that's where you would be looking, or that's where I would be looking to put on a short position if it happens. Okay. But again, this is a 4-year trend line that's been broken. Talked about this a bit over the last really number of months. And this is a major breakdown. I mean, this is a descending triangle, folks, that's gone on for years. And the target from this pattern is 125. Okay. You're taking the width of basically the triangle height. Okay. And you're extending it to the breakdown level. So yeah, there's plenty of room in this. It's all about obviously finding the appropriate entry. So any sort of retest on the breakdowns, 43.80, 44.80 is going to be ideal resistance. All right, let's move on. Pound dollar, not a lot to add here. I kind of just wanted to remind everyone that, we've got actually for, kind of a mess, I guess, after the crash that you had a couple of weeks ago. You do have pretty clean price action. The market, was resistance, broke it, even, acted as support on that resistance this was in Asia a couple nights ago. Market took off on the upside. Have drawn in a new fork here. Okay. Again, just a modified shift fork, and it's just a trend line off these lows with the appropriate parallels. And you can see the 75 line was actually resistance at the last 2 peaks. So watch for support from the 25 line, which is down near 22 20 or so. Yeah, you know, we said 22.19 last night, but that's where we're going to be looking for some sort of support. And you know, it's in about 50 pips or so. All right, so watch for that level. You also have, just looking at this real quick, look, I'm noticing that you'd have the spike low down here. This is kind of the post-crash spike at 22.25. Okay, so that's a pretty good spot to look for some sort of a low or support, you know, if you're going to make it higher. Now, the level that I'd be looking to actually sell into would be up here. Okay, that's the former channel support, right? You get the former channel support, so you'd be looking for it to provide resistance at this point, and that is basically 20, you know, near 24. 124.29, of course, is the close of the crash day. So I find those useful as pivots. You know, for dollar yen, for example, right? The crash day from Brexit was like 102.15 or something. That's, you know, it's been a pretty good pivot as far as you know, looking higher. And then don't forget, we've got, of course, the analog with the British pound, right? And let's see, is this the appropriate one? No. Yes, this is the one. So remember the analog, we were comparing kind of crash scenarios, right? Where maybe be looking to see if one of these dollar yen or say dollar rand, inverse of it, of course, or Kiwi dollar back in August of last year, if one of these ends up providing some sort of a map, if you will. Well, so far you've got the low really just 2 days later. So none of these are, you know, really following. But it's interesting. The thing that I'll note on here is that after this week, we will have gotten past the point in all of them when all their so-called, you know, kind of secondary lows were put in place. So that's just on Friday. So you have really just, you know, not even 2 trading days left, or 2 trading days left until that's here. So after that, if you're still holding up in cable, that might be time to get long for the run up into the former channels in 124, 124.30. Okay. Aussies, like I said, the big one that I'm going to talk about, but I want to save that for the end. So first, I'm going to look at Kiwi. Not much to change from last night. Again, we spiked higher today. We hit 35 last night, 72.35 last night, right? And that was the spot we were looking for resistance. You had the 1618 extension up there, but went through on a spike here just this afternoon at 11. Huge volume in Aussie and Kiwi, biggest volume since NFP. So it may be that these, you know, are setting up to potentially pause a little bit, right? I say pause just because of the capitulation that you get on these really high volume levels. Okay, so you can count 5 waves up here. I'm not quite sure if it's complete. You know, I don't really feel like shorting Kiwi right here. It could work because of the level, but my thing really is to look for more of a dip to buy. Okay, so let's just say, for argument's sake, that you are done. Eileen, what do you use to measure volume? So I'm looking at the volume for futures volume, and this is that right here. So you can see here, this is the highest volume you had. You can see the red bar. That's what that means. Highest volume since NFP, and that was NFP. Okay, right here. All right, so pretty big volume level. That's Kiwi dollar. Australian dollar, you had a decent volume level too. Again, biggest one since NFP. Okay. Excuse me. Wondering what today's volume is going to look like. Not super crazy for this is the OBV. Remember, on balance volume. Talked about this a little bit for Australian dollar. I mean, this says that Australian dollar should be like 85 cents right now. Okay, just saying. But let's keep on going back. So Kiwi, I'm looking for a pullback. I don't like shorting it. I feel like Aussie and Kiwi are both going to go through the roof, especially Aussie. But look, the chart is a chart, and this is resistance if there is such a thing. You can see the daily chart is pretty clean. I mean, you're right there, right? So again, I'd rather be a buyer of weakness in Kiwi. You know, it's still within a broad bull channel at this point, right? 72, 73 might be a more important area for a pullback, but let's see here. Okay. Let's say for argument's sake, again, that we do have 5 waves to the upside on this. So 50% retracement, 71.40, 71.16 is the 618. I would be looking more for support, however, on just this trend line, right? If you draw the trend line like this, you can see the exact same angle. Just crosses the 2 highs from today, from Asia. And, excuse me, from Asia, and then just a couple hours ago. So, you know, if you pull back here, it makes sense to look for support on one of those angles, right? And, you know, if this is indeed a 5th wave or a 5-wave rally, really what you should be doing is looking for support at the base of the 4th wave as well. And the base of the 4th wave, you know, is like 71.80 or so. So and that's the NFP level actually. But, you know, if you can chop sideways, maybe for a day or so, get into this level, that would, to me, present a pretty good opportunity to get on the long side. You know, it's different if you're talking about short-term like scalping, right? I'm talking about more, where's this market going? Is there a swing underway? And if there is, where's it going? Not talking about taking 10 or 20 pips out of, you know, obviously it's totally different, but for bigger moves. Okay. Kiwi. Dollar CAD, up 30 pips on the day right now. It had been down at close to 130 just 2 hours ago. Crude oil still looks really good. We'll say that, right? Crude looks like it's going to 54 bucks. I mean, you've got a big divergence between crude and dollar CAD. It's really been going on for quite some time. They do tend to come back in line, but there's no saying how long it lasts. So again, I'm not going to spend a lot of time on CAD because I've talked a lot about CAD lately. I'm wondering if this is a slope that's worth following. You still don't really know. You know, this is a short-term chart. You know, I hate to say like sell this upper parallel because look, I just don't know if that's gonna, you know, if that's gonna work. There's nothing really clean on the downside here. You know, the only thing that says maybe this is the right thing to look at is the fact that a parallel extended from the low here kind of crossed through this morning, and you got this big rip. But, you know, for me, the more important level, I think, is probably just the daily chart, or the thing to look at. So you have a big wick here, and I'd be looking at this 31, you know, 80s area, right? 3180s, 132 area, really the underside of this trend line, okay? And then, of course, there is the other possibility that we do continue to move to one more high before this rolls over, and that is simply the comparison that we were looking at way back here. This is the November 2004 rally, and it's really quite similar. You know, it took 25 weeks and went up close to 9%. This is week 24, so if we were going to top in the 25th week, you'd top next week, actually. And then you could actually fall apart. So here, I'll show you. You can see it's overlaid here. Look how close that is. How close that matches. Pretty crazy, right? So maybe we go to one more high? I don't know. It's certainly, if you're really trying to, like, you know, if people find themselves over trading and they trade too big and they're like, well, this is it, and it's hit like 10 times, it's, you know, try to wait until you can cry uncle and then put on the trade. It seems like is the way to do it these days. But, you know, hopefully at least you can see the light at the end of the tunnel as far as, you know, corrective activity is concerned. But yeah, heading into tomorrow, area I would look for, again, is just this area still. This is a chart from last night, but I'd be looking at the same thing, right? Be looking at this 3180s, 32 area. And if you get, you know, if you trade up into that region and then turn over, you know, then you might want to put on a short position. But you know, there's no saying you could go through this and go to a new high and top next week, right? So not too much clarity there, but it is what it is. Okay, let's go to Aussie now, because this is, so Aussie dollar, let's just look at it real simple. You've got a breakout. Okay, this is a breakout. Aussie dollar could, you know, eventually you could be this upper parallel, you know, way up in the 80s. Kind of pisses me off because this is not, well, there's a lot of things wrong with Aussie in the long side right here as far as seasonality, as far as analog, but it doesn't really matter. None of that matters. Everything that matters is price at the end of the day. So here we are at 77.18, and if we finish the day like this, you know, so barring any sort of decline back down below, you know, 76.90 or so, but if you finish like this, the market has broken out and is headed a lot higher. So yeah, this is a breakout. Now heading into tonight, now there is, as you know, there is Aussie employment tonight. Okay, so you do have, you know, we do have some event risk, if you will. So if you don't like necessarily buying breakouts at the highs, then could be looking for support down at one of these trend lines. And really 76.90 is probably about the best you know would want to see as far as potential support. You know, that's you got a former high up there. Okay, high from, it's basically the opening range high of August, 10-4 high, 76.90. Okay, and then it's the trend line as well. So how big and how important might this breakout end up being? Well, let's take a look. So weekly chart, what you're looking at here is chart of Aussie with the 52-week closing high and the 52-week closing low. It's been 273 weeks since Aussie dollar has made a 52-week high, and that was the high back in July of 2011. So essentially, if you close the week above 77.19, where you are right now, basically, if you close the week above 77.19, you will have, by this definition, completed one of the longest downtrend in the history of Aussie. So what I did was I went back and I wanted to see when or what other instances, or were there other instances in which you actually had downtrends or uptrends that lasted this long. So again, that's 273 weeks is the figure we're looking at. All right, so here are the 5 instances that I found. There's only 5, and I'm looking at the majors. I'm not looking at non-dollar crosses. I'm looking at the majors and looking at weekly, the weekly chart. So let's start with uptrends. Okay, so New Zealand dollar, the Kiwi ended up having an uptrend that lasted 274 weeks. And it ended, as you can see, right here. So that uptrend went from November of 2000 to 2006 in February. And what happened after it made its first 52-week low was it kind of fell off the face of the earth. It went from 67 down to 61 in not very long. So from February through March. So it was not very long, where you had a pretty sharp decline in the New Zealand dollar. So that's one instance. So the point being here, long trend finally ends, quick washout in that move. Okay, dollar Swiss uptrend had an uptrend that actually lasted dollar Swiss had an uptrend that lasted 350 weeks. There was an uptrend that lasted from 1978 all the way until right here. All the way until 1985. All right. And as you can see, you got follow through, and then you got a kind of a, snapback recovery, whatever you want to call it. The market continued lower in a very long downtrend. So this one also followed through. This was Plaza Accord, as you all know, or if you don't, the Plaza Accord was the coordinated intervention by the world central banks to basically devalue the dollar, okay? Sell dollars, intervene. Dollar yen actually had 2 downtrends that lasted at least 273 weeks, and we'll look at those here. So 2 downtrends. One of them is pretty recent. Okay, one of those downtrends ended 285 weeks, and that one ended in 2012 with the big breakout, right? And that one actually, that went straight up, right? That technically, by this measure, came to an end in January of this year, actually, right? First 52-week low. So in this one, you also had basically all the ones we've looked at here, all these examples that we've looked at, when you've gotten the so-called trend change by the new measure of saying, new 52-week high or low from the preceding move, they've all gone in the direction of the new move. They've all broken, they've all been like real breakouts, right? And these are weekly charts, okay? So keep that in mind. I'm saying the Aussie dollar, technically you have a breakout today on a daily chart. Obviously, if you go to a weekly chart, you're going to get less false moves, right? You might have to chase a little more. Okay, so you get less false moves, and in the event that we close above 77.19 this week in Aussie, we will have technically completed this, downtrend from 2011, and you could have a significant breakout. The other downtrend was in 1995. That one was 280 weeks. Okay, this one was a little trickier, I guess, if you were trading it in real time, because you would have traded to a new high, would have pulled back sharply, and every time you went to a new high, you kind of pulled back, right? Like you didn't get a runner up until here, right? So kind of tough to say that one worked super well, but at the end of the day, the broad trend was still to that direction. And there's one more example. The dollar CAD had one such move. It's not this one. That's only 257. The dollar CAD one completed a downtrend at 311 weeks in 1992. Okay, and as you can see, that breakout continued straight on to the upside for its initial move. So basically, the point of this is I'm saying that you have this extremely long-term, behavior change that we're kind of knocking on the door here, right? And if you look at it, so these are closing prices, but if we look at it on the bar, okay, we've really been testing this since August, right? On an intra-week basis. And this is one reason, I guess, why you might want to wait for a weekly close. But on an intra-week basis, we have tested, hold on. Okay, sorry about that. Okay, so we've got the weekly charts. You can see since August, we've basically tested this level 1, 2, 3, and this is the fourth time. So, if you would have bought intra-week on these, you would have suffered some drawdown. Obviously, I hope you would have been stopped out. Otherwise, you're just praying for this to go in your favor. So yeah, if we close above 77.19, it really is the first real signal that this thing is off to the races for Aussie. So if we look at it in that way, I think it's probably a pretty good idea to kind of be an Aussie bull. Let's look at the short-term picture for the Australian dollar. So here's the daily, right? I thought we were going to go back and, I thought we were going to do this, come back here, and then go higher. Obviously, it did not happen that way. Look at the 60-minute chart. So could make a case from an Elliott wave standpoint that you've got 1, 2, 3, 4, 5. Could look at a short-term channel here. Might end up being lucky in buying something on this. The median line is probably your best spot because this is where you really took off from. And this is the trend line that goes back, from the highs here. Hold on. Yeah, okay, that's the same trend line. So that's the trend line that goes back from the highs. So if you were to get some consolidation before we made the real move, then essentially this lines up with the month open at 76.57, right? So, you know, a little ease down into Friday support, maybe then higher. I don't know. You know, my thing is I want to be long given the possibility, given the potential for Aussie to go up 1,000 pips, basically, right? What about other crosses? We just looked at Euro Aussie before earlier. One that's pretty intriguing, I think, is actually Aussie Yen. We've yet to get up to 80.20. It's the 200-day averages right here. And then, of course, you've got the channel about 80.60, 80.55, 80.60. Okay. You know, this eventually should break to the upside, right? We have the higher floor, and you know, if you're unfamiliar or confused about what I mean by that, get the channel support here on Brexit rally, and the next big low in the sequence was at the midpoint of the channel, right? So that implies, you know, a strengthening market. It's a higher low, not just obviously on a horizontal basis, but as well on a you know, on a slope basis, right? It's like divergence. So we'd be looking for a move here, and you know, a break out of this trend channel. I mean, that's, you know, talking about a significant development. You've been going down since the beginning of 2015 within this channel. Okay, so you could be headed a lot higher. And now look here, just in the last couple of days, what's happened? Breakout really on the 14th and sideways since then, right? And essentially holding former highs at 79, 79, 12. The last 2 days are right in that region, 79, 79, 12. Okay, so, you know, looking quite positive there as well. I guess the question, you know, that at least question that I've gotten before on this stuff, I talk about like a big Aussie breakout or, you know, Aussie Yen, or, you know, these all sound like risk on trades, don't they? Right? And isn't the stock market supposed to crash? Well, I mean, look, you can wait all day, wait all week, you know, forever for the market to crash, and it doesn't mean it's going to happen. Didn't we look at this last week a little bit? The potential for the S&P to basically do something like this, to make like an ending diagonal, right? 1, 2, 3, 4, going to another high 5, right? I mean, that would fuel one hell of a run, I would think, in risk assets. If you got another run in the S&P to new highs, and look at it even on the monthly chart. So like, here's the monthly chart. Look at the arrows. Okay, obviously, is it going to be perfect? Of course not. But generally speaking, a monthly chart, you're holding some pretty big level. Okay, this is the old this is the pitchfork line that goes all the way back to the 2007 high, and that level again was resistance. Get rid of the arrows because some of them, I don't even know why they are where they are. You know, for the most part, pretty big resistance. Support became support on different months, crashed through it. Okay, support, resistance, 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 and it's been support now, you know, since September. So this is the weekly chart, not the monthly chart. That's why it's all goofy looking. Okay. Anyway, so now you can see it better, I think, probably. All right. So you see what I'm saying, though? You see how many wicks are on this, on monthly wicks? How many wicks are on this thing? So we get to one more push higher to complete a diagonal from here, and then the market can crash after that. I mean, I've thought that that was the top, and but nothing's happening. The market just won't do anything. There's nothing worse than a market that goes nowhere. It's confounding, really. But you've also got obviously the former highs here, basically holding as support now. So, you can have all the theories you want in the world, but at the end of the day, this thing's still holding up, right? And I can think of no better way to get prepared for, or some sort of a crash type move than for this to be a diagonal. 1, 2, 3, 4, 5. Okay. Alrighty. So that pretty much does it for me. And what I've got to talk about here, again, the big highlights, going into tonight with employment data in Australia and the potential for just an absolutely insane breakout in the Australian dollar, 76.90, 76.57. Okay, you've got about a 30 pip range there that I think is probably going to be support if you've actually really broken higher, right? If the market is for real, is going to, make a move and actually go on a trend, then that level should hold. Basically, the congestion that we had going into the high yesterday. Okay. That's really where my biggest focus is right now. Okay. Dollar CAD, I like the big wedge scenario and potentially headed a lot lower, but today's action doesn't really inspire too much confidence, does it? In being, ultra bearish at the moment. You go to 130 and then 2 hours later you're 140 pips higher. Can Wall, what's up, my man? How you doing? Talking about crude. He says, thank you for the awesome levels for crude. Let's take a look. You are more than welcome, my friend. And let's take a look here. Crude oil might be getting a little heated. This is an analog too that goes back to, it's been following it pretty well at times, but it says that we could peak at the end of the month. So I still think we go higher. I still think we go to $54. That's at the end of the month. When crude might be getting a little overheated. I mean, we just went through the high from June. Okay, so we're at new highs for the year. And the next level, as I said, is about $54. As far as buying it here, entering it here, to me, probably a little late in the game for that, for like new longs, right? You've already got a 5 here, a 5-wave move to the upside. Let's see here. Let's see if we can work on something. This is really not that great. Yeah, I mean, I'm not going to tell you that there are good levels to enter on the long side from crude here because kind of already we've kind of already, ship's kind of sailed a little bit, right? I think it goes to, again, I think it goes to $54, but that doesn't necessarily mean that you want to be putting on fresh longs at this area. I can give you, look, there's horizontal levels to look at. Like this high right here is at 50, 70, right? What's that? 50.72 would be a level that you probably want to pay attention to within the range. This high right here, 50.55, probably a level that you want to pay attention to within the range if you get a pullback, but essentially we're getting a little extended. So I would look at this. Here, this is not the dumbest setup in the world. Okay, right here. So 50.55 to 50.72. Okay, this region here, I do think this market does need to digest a little bit, because again, if we've got a target at 54 towards the end of the month, it's tough to see, how you're not going to go a lot higher than that, because you've still got a lot of time between now and then. So I'd be looking, again, if you do get a pullback here, kind of erase a lot of today's move. It'll confound, I'm sure, a lot of people, but that would be your area for support, in my opinion, 50.55 to 50.72. Okay. Anything else that I can answer for anybody? I'd be happy to look at other markets. We haven't really looked at gold yet, have we? Let's look at gold. Sure, we'll look at gold, look at silver. So gold, it's still tough for me to think that this decline is over, but maybe it is. The 12, I mean, we wanted to see this down here. And the descending triangle move. There's an Elliott wave case, wave A, B, C, D, E, wave C. So it could be complete. To me, I have gold kind of in the middle of nowhere at this point. Silver, I guess, is the one that was the truth teller all along, huh? It ended up holding that level somehow. It's just a complete, fourth quarter opens and they sold the crap out of it and bought the dollar, and the dollar still hasn't made any headroom. Well, the euro's been weak, but I mean, Aussie's about to break out higher. So, all of a sudden everyone got real excited about the dollar story, and here we are now heading lower, it seems. So silver, Canwall, it's still, to me, we've held this now for, 2 weeks now. So I'd be looking, I guess, I'd be looking higher here, right? Wanted to see it come in a little bit more, right? Do you remember last webinar we talked about, we wanted to see a low down here at 1634, but if we were going to get there, we should kind of be there now. And that's another thing with, pitchforks and horizontal levels. You line them up, and it does give you a time, of when you should be looking for that level to get tested or what have you. And the fact that the market's continued to hold up and we haven't made progress on this, you can't stay married to an idea forever. So we're still holding up. And since we're still holding up, I'm kind of more inclined to be more constructive on this. Okay. Let's see what a short-term chart looks like. Well, again, this I still have not broken through any highs. There's not, it's not like there's not like an uptrend on the hourly chart to look at by any means. So to answer your question, Ken, while asking levels to go long, no, I would not do anything here. The only thing I would do is I would pay attention to the market if it were to trade back down towards the lows, okay? In other words, if you got back down here towards the range down here, here's the hourly chart, you know, pay attention to the line, okay? You know, down near 1730, that's what I would do. You don't want to chase it off of support. You want to chase it into support, okay? If you were to go higher from here and we were to start to make some higher highs and higher lows on this hourly chart, then you would be looking at, you know, maybe putting on a long position, you know, within a structure on the hourly. As this is right now, you know, you're coming off of big support, but you're not at support. So, you know, long here is just kind of a long shot and praying or whatever. So, your spot looks like tomorrow, it's right at the range lows, looks like about 17, you know, 1729. So just pay attention to that down there, Ken Wall, and any other silver trader out there. Alrighty. Okay, well, I'm going to wrap this up. Thanks all for attending. Let's pay attention to Aussie here the next day or two. Could be the beginning of something quite special on the upside. And again, the other big thing, of course, you know, as we all know, is ECB tomorrow. And that 108.70s, huge level, folks. Huge, huge, huge level. You know, keep in mind what's happened the last couple ECBs, right? We've had some big moves off these ECBs. Well, not recently, but last year you had some really big ones. December, March of this year. Last October, ECB really put the nail in the coffin for the euro. It sent it a lot lower, but we'll see. So heading into that euro tomorrow, pay attention to 108.70 on the downside. All right. All right, guys, talk to you later, and I'll get this archived ASAP. All right, take care.